Hey, what's up everybody? Rob Gill, Epic Financial Strategies, and today's gonna be a really cool conversation. We're gonna discuss what does pay yourself first mean. You know, back in 2008, I had built what I call my first wave of success in business, but I did it in a way that was unpredictable without a formula. The one thing I did know every single day was to wake up and have the best energy I could have that day, no matter what was going on externally. At that point, we were opening up new accounts over the phone, developing relationships. And what happened is 4 people went to 6 people, went to 8 people, so there was a little bit of a scale. What I didn't know then, that I found out later on, was the importance of paying yourself first. And what do I mean by that? So as I was making money, I began to invest in individual stocks. And as I invested in individual stocks, I confused that with paying myself first. Because individual stocks, by its very nature, if it is a short-term view, for me, I was taking on a lot of unnecessary risk, which I wasn't really aware of at that particular time. So as my world was involved in individual stocks, and as the markets, because they tend to go up and down, and if there's short windows, that's where you could put yourself in the biggest risk possible. I was in a very big risky situation. What happened is when the market went down, all my money went down. And I didn't have a backup plan for when something was up here to when it went down to here. And that takes me to pay yourself first. Had I been paying myself first, 15, 10, 20% of my income, and then after that, taking money into these other investments, when the market did go down, I would have been in a different position. I would have been in a position of liquidity, especially when economic winter was hitting that specific part of whatever my money was invested in. So for all you folks out there, as you survive success, and as you climb the wall of financial success in any kind of business that you're in, it doesn't even matter what it is, as that begins to happen, because you may have worked really hard for a long time to get to that point where there was a breakthrough, it's always important along the way to pay yourself first from a discipline standpoint, because once that money starts to become a windfall, you want to still have that mindset of paying yourself first. By doing that, that's where a lot of success happens, because whenever there's a pullback or whenever there's bubbles that burst in any kind of economic situation, the folks out there that have liquidity and cash, and I don't mean cash under the pillow, I mean just like money in money markets or certain type of guaranteed investments, what begins to happen is they then could go in, or you could go in and be able to take advantage of opportunities when things are on deep discount or things are on sale. As I sit here right now, it's July 2021, and the housing market is on fire, meaning real estate's climbing every single day in ways that I've never seen before. So point is, anyone that's liquid and has a long-term viewpoint, this, and I'm not suggesting this to anybody out there, but this may not be the ideal buying opportunity because of such growth that's happening right now. However, there's going to be a time, history may not repeat itself, but it does rhyme. Go back to 2008 when the real estate market went down, there was buying opportunities. So for any of you folks out there that are paying yourself first, that are using their money to fund a cash value life insurance plan, where not only you're getting a guaranteed rate of return that grows and comes back tax-free, you're also going to be able to take advantage of opportunities to get multiple uses of each and every dollar, therefore mimic what the bank does, which is the velocity money multiplier strategy. I'll keep it simple, meaning you give the bank money, they give you a small interest rate, but then they loan your money out over and over again, and they make on average, check it out, about 40 cents on every dollar. You yourself, by taking the pay yourself model first and being able to build up that reserve, can mimic those strategies if you have a long-term view and you put the proper people around you to help in that decision making. So let me just bring it back home, folks. Bottom line is this: with the pay yourself first mindset, the first thing you want to do is take 10, 15, or 20% of your income, whatever you could afford in each and every month. You may only be at 10% right now. Do that instead of not doing anything. As you begin to make more money or earn more opportunities, take that number to 10 or 15%. That's the first thing you want to do. The second thing you want to do is be able to continue to understand the concept of savings first by reading books, by being able to listen to mentors that understand the importance of proper planning. And last but not least, every 6 months, check where you are, see what you could have done better in your budgeting system, and then make the adjustments accordingly, because next thing you know, you could be at 20 to 25% savings. Please, in the comments below, let me know some of the success stories that you guys, gals out there may have. Tell me how much you're saving. Tell me how much you started saving and if it's accelerated and what it has led to. And specifically, let me know exactly where you are at, whether it's 10%, whether it's 12%, whether it's 15%. I'd love to be able to hear what all you folks have to say. So for me, when I began after my learning lesson of not being able to have pay yourself first mindset, I began to save at first $6,000 a year. Then I went to $24,000 a year. That's the money train. Then it went to $50,000 a year, and now I'm saving money train. Now I'm saving $120,000 a year in the pay yourself first mindset. You know, for me, folks, what's incredible, and I didn't know it at the time, but I'm here to share this with you right now. At first, when it was $6,000 a year, it was like, wow, that's a lot of money, and oh my God, am I going to be able to do it? And then when it was at $24,000, I was like, wow, I can't believe I thought $6,000 was a lot. 24 is a lot. What happened is the universe began to provide for me in ways that I didn't anticipate, because I was very comfortable in this space of uncertainty. And I began to put one foot in front of the other with a game plan and a strategy. And as a result of it, that's how I was able to accelerate in everything I did. And if I could do it, I offer that to you. I believe that, you know, if my information can turn decades into days for you, then I know that I'm doing the right thing today. So with that being said, I want you to get educated. I want you to be able to learn from all the information. Every single day we're dropping new videos that are full of education. Go ahead and click the link below, hit the subscribe button, as well as liking it.